Now you're looking at a person who lost over $500,000 in crypto and made several times that amount. I started down this path 6 years ago and had no mentors, no big capital, nobody gave me tips. I acted at my own risk, just as you are now. Bitcoin, Ethereum, dozens of different altcoins and meme coins are on everyone's lips. Some skyrocket in price tenfold in a week, others lose value just as quickly. Everyone wants to make a fortune in crypto. But it seems impossible because there are too many examples of other people's failures. But it is actually quite realistic to decrease the number of your mistakes by several times. I recorded this video specifically for that so that you could do it. Only experience and pure knowledge about crypto in the simplest terms. My name is Ivan. I am an investor and businessman. I have 6 projects in the field of crypto, IT, and artificial intelligence. And while I am working, right now my digital double is recording this video for you. All the information has been personally double-checked by me. The future is already here. Now let us move on to the main mistakes of a rookie crypto investor and most importantly, how to avoid them. The first mistake, lack of a clear investment strategy and objective. Almost every novice investor thinks that their main problem is the lack of capital to buy a large number of coins. But in reality, without a clear strategy, any purchase is just a waste of money. Buying cryptocurrency without a goal and strategy is not investing, but a gamble in which the buyer acts at random. It will be almost impossible to win this game and make a profit. It is important to be clear about what you want to achieve by investing in cryptocurrencies. For example, to earn a specific amount of money, to achieve a 20% annual return, to triple the amount invested, to make enough money to buy a place to live. You also need to understand how much risk you are willing to take for how long you are investing your money. Depending on this, you need to build your strategy. But whatever the strategy may be, it is not a good idea to invest in digital assets money that you may need in the coming months or even years. The crypto market is very volatile. We are about to face another global economic and financial crisis. Moreover, geopolitical risks are growing. Another crypto winter could come at any moment, causing a recovery of the crypto market to take years. Although talented and world-renowned economists are predicting sustained high inflation around the world for the next 20 years, so investing in cryptocurrency remain relevant. However, how risky they should be is another question. It is important to set achievable goals. Only talented traders and incredibly lucky people can make millions by investing $100. If you are an ordinary person who invests free money in cryptocurrencies, it will be more realistic to set a goal for yourself of 20 to 30% annual return. The composition of your crypto portfolio and the chosen strategy depends on your investment goals and horizon. That is, the time frame over which you are willing to invest. The longer the investment period, the more risk you can afford to take. For example, if Bitcoin fluctuates in value over the course of a month, but ultimately shows growth over the year, then in 5 or 10 years, it will not be as important how much you initially bought the coin for, whether it was $20,000 or $40,000, because in the long run, you will still make profit. But with short-term investments, it is crucial to time your entry and exit when it comes to trades. This requires constantly monitoring the market and adjusting the assets in your portfolio. The second mistake, problems with diversifying the investment portfolio. When creating an investment portfolio, it is extremely important to diversify risks, meaning you should distribute investments among different crypto assets rather than investing everything in a single one. This increases the stability of the portfolio. If the price of some coins drops, others may, on the contrary, increase and offset your losses. It is optimal to invest in several projects ranging from 7 to 12. If there are fewer assets, the risks increase. If more, the portfolio will have to be rebalanced frequently, that is, the ratio of assets will need to be changed. The yield will decrease while the level of diversification will remain the same. Being ready for risks and downturns is a separate issue. In the crypto market, your portfolio can drop by tens of % or more in a day. So do not forget the golden rule of investing. Keep different parts of your portfolio in low, medium, and high risk coins. Another way to diversify is to buy crypto assets from different market sectors or running on different technologies. For example, mined coins such as Bitcoin, smart contract platform assets such as Ethereum, stable coins such as USDT, and so on. The third mistake is carelessness and negligence. I will not elaborate on this point because I mentioned it in my other video about what mistakes 9 out of 10 beginners make getting into crypto. By the way, I suggest you watch it. As for now, let me briefly remind you of the main safety rules. As long as you own the private key to your crypto wallet, you have full control over your cryptocurrencies and tokens. No one can confiscate them, but it is also your sole responsibility to keep them safe. If you lose your private keys, seed phrase, or wallet password, make a mistake with the recipient's address or transfer amount, no one will be able to help you. The most common security mistakes crypto investors make are sending coins to the wrong address, losing private keys or seed phrases, wrong order. It's when an investor enters incorrect data into a trade order without paying attention. There are 3 mistakes people make most often. The first is entering, for example, 1,000 coins instead of 100. The second mistake is an incorrect transfer address. The third mistake is transferring to the wrong network. Basically, the network is the second part of the transfer address. And of course, you can't let a scammer convince you to send money to them. You also need to be careful with crypto wallets and other apps. You can protect yourself from most of these mistakes by storing your crypto in a trusted, secure, and convenient crypto wallet. I have a video where I compare a few of them and choose the best one. Given my own experience of losing over $500,000, I paid particular attention to security. I suggest watching this video. The fourth mistake is to buy high and sell low. This is a universal mistake of all investors, not just cryptocurrency investors. But in the case of crypto assets, it comes at a particularly high cost. Digital assets are very volatile and can drop by tens of % in less than a day. Inexperienced crypto investors often think that it is enough to buy a couple of cryptocurrencies, and in a year or two you will already be rich. But at the first downturn, they panic and sell off their assets, locking in a loss. Then they buy the coins again, and when the trend changes, they sell them at a loss. To change this vicious cycle to a strategy of buy low, sell high, it is important to closely monitor the market. For example, many rookie investors bought Bitcoin in December 2017 at the highest price at the time of around $20,000 per coin. After that, Bitcoin began to decline and a year later was worth just above $3,000. Many people sold the coin at this time, locking in a big loss. And those who bought Bitcoin during that downturn, or simply held onto it, were able to sell it for about 20 times its value in 2021. The fifth mistake is trading based on emotions and chasing hype. I also talked about this mistake in my other video, but it's especially important for an investor to understand that making investment decisions based on emotions and hype rather than on a chosen strategy is one of the best ways to lose money. There are 2 opposite extremes. The first is the fear of missing out on profits. When a certain asset is growing rapidly, it is tempting to invest in it too. If you get there in time, at the beginning of the trend, and get out in time, you can make a great profit. But beginners most often decide to buy only when the asset is already overbought and the upward movement is about to be replaced by a downward one. The second is fear, uncertainty, and doubt about the asset, leading to a desire to get rid of it at any cost, even at a loss. When an asset falls too fast or doesn't go up for a long time, it's very hard to resist selling it. But if it's a solid project and it hasn't become weaker fundamentally over time, its coin value is likely to rise. Another mistake is investing in assets based on the hype around a project or positive news about it. In this case, it is easy to buy an overvalued asset. Growth based on hype is always followed by a precipitous drop. A good way to avoid being manipulated and sensibly analyze the potential of a project is to look for useful sources of information and learn more about the market. By the way, if you have watched the video up to this point, it is quite possible that you will be interested in other useful videos on this channel. Subscribe and I promise, here you will get only pure knowledge and facts about cryptocurrency. The 6th mistake is trading. Trading means actively buying and selling cryptocurrency, which is another good way for beginners to lose money or make nothing. Yes, you can find thousands of crypto trading videos on YouTube, but you have to be very careful and sensitive to verify such information. Take a closer look at those videos where they reveal to you secret strategies for making thousands of dollars a day. Try to write out only the information about what exactly you need to do to achieve a similar result. What will you see? Number 1, all of these so-called strategies are no different from each other. And number 2, they ultimately don't give you anything. If I am wrong, then who are these hundreds of thousands of viewers watching these videos? Multimillionaires? And then why do they keep watching these videos? And what does your own experience tell you? I will tell you a secret. There are quite a few channels about crypto trading, binary options and so on, where a person presenting the information is actually an actor who gets paid. There's a production team, script writers, and so on behind them. And the elements of the luxurious life that yet another crypto blogger shows you sometimes just don't belong to them. Trading is the most risky type of making money. In fact, I wouldn't classify it as the same thing as investing. And of course, there is only a handful of people making money from trading. This can only be done by professionals who know what they are doing, not by those who trade randomly. If this appeals to you, be prepared to spend a few years learning and lose a lot of money. But even then, there is no guarantee that you will be able to achieve higher profitability than investors who keep their portfolio in the medium risk zone. For beginners and most ordinary investors, medium-term investments will be optimal, buying during downturns and selling when the price meets your goals. Sometimes the market will present rare opportunities, which are worth seizing, for example a short-term downturn, caused by some fake negative reason. But you should not invest a significant portion of your portfolio in such short-term trades. The seventh mistake is to only invest in junk, cheap crypto assets. In an attempt to hit the jackpot and discover the next Bitcoin or Dogecoin, many beginners often chase undervalued projects that have some potential for growth. They see that coins like Dogecoin, Shiba Inu, or other meme coins that were essentially worthless skyrocketed by 1000% and made early investors a fortune. So they too are looking for projects hoping to replicate this path. But not every cheap coin is in for a price rally. You should not invest in a project just because its asset is cheap. Yes, the lower the price, the higher the potential profit, but it's also closer to zero. Just because Bitcoin went from almost zero to almost $70,000 does not mean other coins can do it too. Therefore, diversify your investment portfolio. Invest about 2/3 of your money in low and medium risk assets, and only 1/3 in risky ones, but potentially high yielding assets. But that does not mean buying just anything that's cheap either. To evaluate the real potential of a coin or project, you need to know about a few sacred investor rules. I made a separate video about this. I recommend watching it. The eighth mistake is following insider information and signals. Beginners like to subscribe to channels, chats, and forums that discuss various insider information, which in turn comes from internal sources of the project, as well as signals, the interpretation of market indicators or data from a technical analysis of the future asset trend. It's not a bad thing to get a better understanding of how the market works, but do not blindly trust everything you find online. The main goal of most authors of such content is to sell you access to a private group or chat, or teach you some supposedly unique methodology, and of course not for free. The vast majority of such information is random statements. If they come true, the authors will make it seem like they predicted that. If not, they will blame the unpredictability of the crypto market. The chances of genuine insider information appearing in the public domain are almost zero. That's why it's called like that, so that only a few people can profit from it. All public information about the crypto asset is already embedded in its price. So never buy any asset just because some blogger or an anonymous supposedly super successful investor from Telegram advised you to do so. Do your own analysis. It is better to miss out on a profitable trade than to enter a losing trade and lose money. The ninth mistake is to sell an asset on a downturn and not lock in profits. Beginners are often mentally unprepared for their crypto assets dropping in value and panic sell them at a minor correction without waiting for a change of trend. Another mistake is not selling an asset that has already shown excellent profit. The fact that a coin has seen a 500% increase doesn't guarantee that it will continue. Tomorrow, the price of the coin could crash and never reach its former heights. If you are afraid of missing out on an asset that could become the new Bitcoin and sell it too low, sell some of it and lock in a profit. You can reinvest it, meaning use it to buy other assets. This way, you diversify. In other words, you spread the risks. The easiest way to lock in profits is by choosing a strategy, for example, selling when it reaches a price you set. Finally, the 10th mistake is to invest money that is not yours. Here, I am referring to two situations at once. The first one is when you invest borrowed money, get a bank loan or borrow money from friends, or using leverage in the stock market. This is one of the biggest mistakes any investor can make. And most often it is made after initial success, because it seems that if you invested more, the profit would have been greater. Therefore, in future trades, people try to invest as much as possible. But this creates big risks. When the trend changes, the loan you took will lead to financial disaster. You will lose your deposit and have to repay the debt. Only seasoned professionals are able to use loan strategies. They correctly assess risks and understand exactly what they are doing. There are far more people who have gone bankrupt by investing borrowed money than those who have gotten rich that way. It is better to gain a smaller profit than a larger loss. But another facet of the same mistake is investing money that belongs to you, but is actually needed for your daily life, mandatory purchases, and to pay your bills. That is, investing more than you can afford. In a bull market, where the value of certain coins goes up by hundreds of percentage points a month, it's tempting to put all your money into cryptocurrencies. However, this carries the risk of losing them. You should not invest money in the crypto market that you need for daily expenses or in the near future. There are no guarantees of an upward trend. A 50% profit last month does not guarantee that you won't lose any money this month. In order not to sell assets at a loss when the trend changes, you need to be prepared that the money invested will not be recovered for months or years. Some assets have yet to reach their highs since 2017. These rules are probably known to all investors, Still, in the pursuit of easy profit, almost no one adheres to them. Many people invest all the money they have in cryptocurrencies, and during a market correction, they are literally left without almost nothing to live on. Invest not only in cryptocurrencies, but also in other assets, using only the money that you need to maintain your current standard of living and that you will not need in the near future. All of the above investor mistakes are trivial. Most people are well aware of them, but still continue to make them. The reason is that reading about them and experiencing them yourself are two big different things. It is easy to say, do not panic during a downturn, but it is completely different to watch your portfolio shrink by half. It is hard not to get caught up in the gold rush when the value of the next shitcoin skyrockets tenfold in a couple of days, and if you had invested in it beforehand, you might not have to work for the rest of your life. Obviously, you should buy assets during a downturn, but how do you tell it is the bottom and not a continuation of the decline? Therefore, in reality, avoiding mistakes will only come with experience. But you will learn much faster and lose much less money if you combine practicing with getting information from a reliable source. You can learn not only from your own, but also from other people's mistakes and successes. So, I have tried to make this video as useful as possible. If you are interested in even more facts and useful information about crypto, I have prepared a whole series of videos for you on how to choose a coin, how to tell if a crypto project is a scam, how to choose the best cryptocurrency wallet, and much more. The link is in the top right corner and in the description below the video. Don't forget to share your thoughts and ask questions in the comments. I will try to answer all of them. Thanks for watching.